Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording here at 4:30 p.m. Eastern Time on February 27th, on Friday. It's the last day of the trading month, so that's two trading months for 2026 that are in the bag. And the theme for today's show is the markets are sending messages, and different markets are sending different messages. And on today's show, we're going to try and make sense of those messages and decipher them and sort of see if we can pick up an edge from there. My name is Ben Maldonado. As always, I'm here with my partner Barry Hederachi. Barry, how you doing?
Doing good, doing good. It was an interesting week all
Yep.
around.
Very interesting. Hey, remember, we're trying to grow the channel this year. You guys did a great job last year. So if you like the content, make sure you like, subscribe, hit the alerts. It helps us grow the channel. Doesn't cost you anything. It's a win-win for everybody. So please do that. That's the end of the commercial. So Barry, crazy, crazy week, right?
Yes.
Another week of a lot of activity and essentially going nowhere in the S&P.
S&P going nowhere, but a couple of things moving in with some directionality. So
And
we'll
that's
cover.
yeah, that's the strange thing is that we've seen strong messages being sent from certain markets, but the S&P, it's like it's getting mixed messages. One day it's saying, "Hey, this is going to be bullish for stocks." The next day it's saying, "No, it's going to be bearish for stocks." And that battle is almost like they're playing ping pong.
Yeah, well, that part is true.
So
And
let's
hey, I
let's
was just
see.
going to ask you, what markets are you covering today? Just so everybody knows and they can stay tuned.
We will cover the grains, wheat, corn, and soybeans. We will cover cotton, and we will cover crude oil.
Right on.
Yep,
And those things are really important to watch right now while everybody's getting bored with the S&P.
good point.
Mhm. All
Very
right,
good point.
let's move on and see what the heck is going on here. So we start with the S&P cash as usual. You can see last week was a short week. We basically traded between 68.20 and 69.09. Well, this week wasn't too far out from that, other than that pump going into earnings, and right back into the swing of things. So let's see. I mean, one of the things to do at this point is once you've had this many months of sideways, you really, I mean, for me, the longer we are in some kind of a strange pattern or a sideways pattern, the more I lean on the charts, more I look for the bars for some kind of a signal, and obviously we don't have momentum to count on at this point. So we're back in the mix, right back in the mix. What can we say? Well, let's take a quick look. We'll go through the charts like we normally do and see what we can pull out of it for next week to help us get through. Looking at the cash, basically 69.09, this is the level we talked about, can we hold above or not? We obviously we couldn't. And reversing on that bar, we had a reversal, and not only a reversal, but we also are continuing our lower highs, which is a sort of a sign of softening markets, right? Softening conditions. Now we haven't made so far, after that high came in, the square high, we haven't, we've been making lower lows and lower highs like we reviewed last week, and we still have the lower highs, but we haven't made a lower low yet. So keep that in mind. And if we just draw a trend line, we have a lot of triangles starting to show up everywhere. So if you just draw a trend line, we can watch it. And if, obviously today we followed through on the reversal from yesterday, and if we continue to slip through, then we break the trend line and we get through the 68.20 level, and we are going to get established in this whole new box, which is really between the 68.20 and the 67.27, right? So this is what's been holding it up, and because we keep coming down, poking a little bit, but not quite willing to settle there. So there's buyers are sitting there, keeping the market afloat, so which is fine, but sellers are sitting up here keeping the market pushed. Before they were up here, right? We were above the 7,000. Now, last couple of weeks, looks like we got pushed down into, one level, one eighth of a square. And now it's looking like, if you consider this week, we poked up, but we're back into the same thing. Now, we can't possibly be squeezed into like eighth of a square range and continue for too long. So obviously a breaks are going to come. And we've done all kinds of shenanigans here since November. So everybody's gone through everything. And I guess, I don't know, just when everybody gets sick of it and moves on is when, or stops trading this, is when it's going to start moving in some direction.
It's like when we were talking during the week, we were saying how, you know, when and if we do finally break out, nobody's going to believe it. And they're going to, they're going to take profit really quickly and this thing will keep
Mhm.
going and keep going and keep going.
Exactly. That's true. And that's usually what happens, right? So 7,000 level, obviously we want to watch, but using the methods that we use, we will be able to watch that, just like using the methods that we use. What seems to be a chaotic market, on the 30-minute charts and the hourly charts that you post, we're able to capture all of that. So we'll get into that a little bit later. So for next week for cash, I mean, I hate to just make it so short, but basically 69.09, 68.20 at the two levels we're watching. We can get above that, obviously take out the high from Wednesday. Then, we can get back established back above 69.09, that being support. Let's see if we can do that. That would help us thread the story going forward. But if we and if we can get below 68.20 and somehow not recover like we've done the last three or four times, then we have a new range forming, which is the 67.27 to 68.20, or we slice right through and we get down to check the real the real levels. So we'll see. But for now, that's where we are. And if you guys want to keep up with our stuff, please follow us on X. The links are in the description. Here's let's just jump to a continuation chart of futures continuation chart. And here, yet another triangle, and we're holding above the 1/4 level. 68.17 is basically where we're watching on the lower end. The upper end is 7,001. And the story here is pretty much the same. We've got lower highs coming through, and since couple of weeks ago, we were making lower highs, higher lows. So lower highs and higher lows. That stance can't go on for too much longer. So, something's gonna happen next week. And we'll be to one side or the other. Well, that's by the textbook. What usually happens is we'll probably fake to the upside, come back and fake to the downside and start it all over again. And that's what I'm a little bit afraid of, right? As soon as I sell out and say, well, you know what, this is just going to go on forever, is when we get a break. So got to keep balanced on that. So let's see what happens. For now, we're looking at the inverse of what was happening earlier in December, which was kind of expanding triangle. That went on and then picked the upper side. Now we're squeezing. So basically reverse of that. Let's see what happens. But you guys have the two levels. We'll have better, tighter levels on the when we take a look at the 30-minute. So we'll do that in a minute. So here's the other continuation chart that's coming off of the low that squared out the high in late January. We had, remember we had two cycles expiring. One was in the early part of January. The other one was late part of January, which squared out. And I had put out the zone for support, which we pretty much held on that first drop. Came back, and this was the second, the secondary support. Either we hold above that or not. So seems like that level is basically nobody's paying attention, other than the fact that this is where the gravity of the entire last couple of weeks have been, right in that zone. So it's just chopping through there. Well, when price gets sucked into a zone, it's a whole nother behavior than obviously bouncing off of it or holding above or below. But when this happens, you just have to wait till it works itself out. The couple of things to notice on this, just along the same path, we weren't able to settle above, right? The green bar Wednesday, we looked like a winner, right? Got up there, and then Thursday we reversed with the Friday follow through to the downside. So none of this is looking great, because if we were really going to go for it now, we would have been holding above this. But we're still we're holding above the lower zone. 67.53 is the boundary down here. And you can see that that first drop held right on that line. And we're in the middle somewhere. Churning kind of comes to mind, but it's kind of Well, let's move on and see what else we can. Here's the continuation chart, not the continuation. Here's the front month. We have the boundaries marked really well on this. 67.36 is the lower boundary. Is that right? Let me check that. 67.40, 36, okay. 736, and the upper boundary is right around 70.28. So those are the two levels to watch. And of course, we closed right close enough to the center, which is 68.84 is the quarter level, and we closed right below that, right? 68.78. And this is why, if you're following the chart, it looks even crazier because we hardly did any movement. So if going for next week, I would watch this trend line. Either we hold it or we break it. We're going to watch the upper trend line. Either we hold it or break it. I'm sure by the time Friday we talk, one of these lines are going to be taken out. And looking at the push to the downside, we're getting lower highs. So it looks like we're going to continue to push. Obviously, we want to see, the trend. I mean, taking out the trend line would be not only would it indicate the little, this positive movement that the buyer's coming up higher and higher, wrapping it up, and 68.84 is going to become the next resistance level if we do that. But so far, we're kind of hanging in there with tooth and nail. All right. Anything you want to add to this, Ben? You both lived through this last week.
No, I think you're framing it well. We just got to watch those levels and see which one's going to give way,
Mm-hmm. Yeah. Yep. And the 30-minute will help us out, I think. So let's look at that in a second. And I'll take a look at the weeklies all together at once, so it's just easier and saves some time. And keeping up with this middle of the range kind of theme, you can see 25 140 is what we talked about last week. So it's weaker below, it's stronger above, and we wanted to see clean bars. So early part of the week we had clean bars below, but the trend line held, right? I think I drew this last week. Wednesday tried to peak up. Thursday we reversed. So that was just kind of a test of that level, breakout test, I guess. But there's another level right there. You can see very easily 25, 477, 475. That's the other level to keep an eye on. Draw that out for you guys. That line. And if you put the two lines together, you see what we're getting, right? We're getting kind of an ascending triangle. And this is why if we take out the lower line, which we damn near did today, then it's going to be the failed breakout, right? Instead of going up and breaking up to the upside, retesting and moving, we're just going to slip down. Now this could be a false break and come back on up, or break to the downside, come up and reverse. So a couple of different possibilities. And the markets never take the easy route. There's always some complicated shit. So let's watch that. But now I can't really make too much more out of it than last week because we're pretty much at the same place. So 25 140 is the pivot level to watch on the daily. We'll see how we do coming out of that. And Ben, you're going to cover the weekly and we'll get a little bit better perspective.
Yeah, we're going to cover the
right?
NASDAQ in full.
Yeah, good. We need it. We need that dose, the longer term dosage. Okay. That was pretty interesting, right? We made new highs while the other ones weren't doing anything like that. And this week,
and the new high's kind of looking like a false break, isn't it?
And then, new highs, yeah, exactly. And I remember you mentioning that at the time, right? It looks like definitely looks like a false break. Why? Well, right now it definitely confirms it because we're way down here at the bottom of the range and even poked a little lower today. And if we were able to hold about this 49, 484 level right there, 50% of the square, 44. 49, 493. Right in that, if we were able to hold above somewhat and move higher, okay, that would have been a good, first initial impulse and a correction, and then move higher. So we didn't get that. So either the Dow's going into some kind of a sideways business, or we're starting to get weaker. I'm starting to think more and more in sideways because we always think in terms of bullish or bearish, right? But it's the middle part that's gotten us for the last few months, and you can see Dow is kind of building it up since last month. Before while everybody else was kind of consolidating. Then, remember, we covered all this earlier, but, Dow slowly, remember, we recovered 47,162 and started to move higher, went up all the way up to the 50% line. And now we're consolidating here. Now, if you remember, we have these lower trend lines on all the markets, and you can see how we broke it this week, and we weren't able to recover that. So that's something to keep in mind, okay? So one of the two things, either we're all slipping lower altogether, holding hands, or the Dow's coming back to join some kind of a sideways business is kind of how I'm looking at that. So that rounds up the indices. Let's go up, look at the weeklies and the 30-minute. Anything you want to add to this about the Dow, Ben, before I move
Just
into the
that
other?
there's the threat, in that chart that move higher was a false break, and now we're going in the other direction. So we have to see if it starts breaking support and not able to get through resistance, then we can say, okay, yeah, that was a false break, and
Absolutely.
and it was a false break from the big stocks, right? Like the generals, the safe havens. So that would
Mm-hmm.
be another message to take in.
And if that's the case, then, really the next, obviously the structural support around 48,344 because of this. And the next big square support would be like 47,162. And the big support is down here, 44,873. Just to, you guys have that in your notes. Let me jump to the weekly charts and take a quick look. Before the weekly, let's take a look at the 30-minute. Hero this week, this is a hero chart. So this week combined, well, 30-minute combined with our fuse line saved the day, basically. So, well, 6,900 was a key level last week. We were trying to get above it, couldn't. And on Monday, we had here's the we had a false break to the upside, flushed all the way down to 48, 68.42, 68.26 right in there, right? Ran up, couldn't hold above 68.62, came back down to 68.26. That was a pretty good test, right? And we reversed immediately, broke the trend line, and obviously cleared all this. And overnight, I remember this, we held above 6,900. So this is a big deal. And I had the trend line here. You can see how 6,900 held. And from there, we got a little bit of a run up. Not bad. Not all of it at practical times, but fine. We got that. And it went right up into 69.72, which is a big square level resistance. And I had this up here even before a couple of weeks ago. If you guys were watching the video, it was there. Well, right here. And so we couldn't hold above it, came back down, and then this was just perfect. On the 26th, we went up and tapped it lower high, had a triangle, broke to the downside, and it was kind of a lot faster than I would have imagined. But yeah, we broke right through, right into that 68.2 area. And then my comment was, if we can't hold above 6,900, we have two levels to watch, which is 68.42 and the 68.09. And so we couldn't. The triangle broke in the morning, and we came back and visited 68.42. Pretty good, given with all that happening, we only had two levels on the board, and the first level caught it. And now Ben and I were just talking, well, if that was a 5, which looks pretty qualifies as a 5, then it's possible we have an ABCD up. And then again, ABCD happens to be just at the 6,900 level. That might be another place to sell it. So we've been basically just selling all week, and they've been lucky for us. It's been working. That's been working fine. And the fuse line, I think on the 24th was it? Like perfect move up. What was it? I can't remember which day it was. Anyway, it's all on X. It's posted there. You guys can check it. So for next week, we're 6,900 obviously is still the key level we have to watch. Now, we get above that, fine. We go up, we retest, hold above the level. And this is a good example of when we say, hold above. We got above, and on the pullback, we held above, right? Held above, started moving higher, took out the old thing high, and boom, we're up. And so that's what we're talking about. The failure of that would be like this. We tried to get up there, and on the pullback, we just failed. So when we say hold above, it's what we mean is not just breaking above. It needs to break above and hold above on the pullback, right? So that's um so for next week, 6,900 is important. If we can hold above, great. We can check out 69.34 and go back up to test the big number 69.72. So that's the upside. The downside, which is a lot more interesting, because these levels are pretty big levels. So if we can't, in fact, I mean, this is a pretty soft close, not being able to get above 6,900. So if we take out 68.42, I mean, really 68.26, we've chopped it up a few times before. So it looks like we're going to get down to the 68.09, 67.90 level, down here or anything initial. So that's kind of how I have to leave it. Like I said, check us on X. We update all these numbers. So for now, 6,900 is key level. If we slip that, then 68.42 becomes the next important level. So even if we go down here, come back up, then all these levels become resistance. So we'll play it like that. Here's my favorite chart, weekly chart so far this year. And it's our continuation chart. And you guys know the history of this, so I'm not going to repeat all that. But basically, 707, 7007 was resistance. We had the circle resistance, we had the lines and everything else. But the thing is, we slammed into that timeline 45 weeks from the low, which is good resistance, time resistance, right? And sure enough, we slammed into it, and we're kind of stalled. The thing to really watch now is to see, if we can get down to the 635 level or not. So far, we're holding pretty sticky up on this upper levels. And last week, we had a inside bar. We took out the low of the inside bar last week, but we didn't follow through, right? We came up, and this week we took the high of that bar out and came back down again. So I think taking out this week's low obviously is going to be important next week. So watch that. And if we can get up all the way up to take out this week's high, well, obviously we're going to challenge the upper level. So keep that in mind. I mean, the upper level is not so much of a problem to the trading to the upside, but if we take out the low this week, that could signal, a lot more weakness. And the reason I talk about the weakness a little bit more and the bullish side is a little bit easier is the bullish side is easier. The short side, the thing is, we can go a lot more. Not only that, if we break at the right time, from that break time, we can figure out how long the duration of the move. So it seems like if we break in here anytime, let's say between this week and next week, we could have a much bigger downside than little games that we've been playing so far this year. So that's why I want to cover it, give it a little bit more extra time. All right, let's look at the cash. It's looking pretty cozy. This is, I don't even know what to say about this. Well, we do have an expanding triangle, and we're right in the smack in the middle of it. So stay tuned is what I can say. Obviously, we take out the lows of this, we have a little bit lower to go and check test. And if we take the highs, well, we get back up to 7,000. I'll just end the pain right there. So that's enough. That's enough of that. Now let's talk about the more interesting stuff. So Ben and I have been talking about the bonds all week. And why is that? That's because this 45-degree line, this major line, 116.14, 116.18, I've been calling it, has been a very important line to watch. It's kind of a pivot. So if you guys remember the last couple of few months, I've been talking about it's always in relation to the 116.5. And here we almost had a breakout. We didn't. We came back down, came lower. And you can see how, ever since we had this big low last May, we've been making higher lows, right? Been all the way up to our resistance at 119.16, 119.5 right there. That was in October. Came back down, didn't really hold it to rally at that point, but then we slipped lower. And looking, obviously it's a lot softer once it's below this, the 45-degree line, which is 116.14 to 18, say 116.5. But then, last couple of weeks, something interesting happened, right? We made that big flush, higher low, and we took out the pivot high, right about then we made our way above this major level. And you can see the bar that broke it was a pretty big bar. And we held above, that week. And come next week, here's the pullback right there on the 20th. And we managed to, move higher. So the big deal here is, and Ben, you can chime in anytime. So 119.16, 119 and a half is still resistance. I think that's based on the square nine. I can't remember how I got that, but it's been in there forever. If you guys go back and look, years back, I still had this. That's why I can't remember. Anyway, it's important to watch. So that's important. And the level above that would be the 50% level, would be 120, 122. The 122 is where we sort of spiked into back in April 2025. And you guys can see how that held, and we had a nice move coming off of that. And ever since that, we just couldn't get above this 45-degree line I was talking about for a brief period, and we got better. So it's been basically wrapping around. And the question now is this another wrap? Are we going to go up here to 119 and a half or so, and then roll back towards the 116 and then mislip, continuing this on, or are we on to something bigger? So the fact that we held this pullback fairly tight, I would say. And once we tap this 119, there's the big question. Are we going to break through that? Or are any pullbacks going to hold about 118, let's say 118? Yeah, that's a fair price, right? And it's exactly about eighth of that square. So if we can hold about 118, bonds are bullish, man. We broke out, had the first pullback. Now we're moving nicely. And so one thing that is moving while S&P is just walking around in circles would be bonds. Anything you want to
And
add to that,
bonds,
Ben? Yeah.
yeah, it's one of those markets that is sending a message, right? It's rallying, rates are dropping. So there's messages that come with that, with those characteristics, whereas the equity markets are stuck in this tight range. Bonds are saying, there's a flight to
Trouble ahead.
safety and there's trouble, right? There's some kind of trouble out there
Right, right.
because
And
the
that's
can
why the confusion in the markets, right? Markets aren't sure which way to go. So,
yeah, yep, yep.
and
One
and
day
if
one
bonds,
day they think it's a
uh,
problem, the next day they think it's okay, right? That's
exactly,
that I mean that's the only thing you can explain the schizophrenic behavior every day we're seeing.
right. So the question now is, are the markets going to rally with the bonds, or is the signal something else?
That's right.
So that's why we want to definitely want to continue to watch bonds and trade it, obviously, because now we're above the key. We're not stuck with that any longer, and we can pretty much freely trade it between that and 119. See what we do there. And the reason that's important is because of this. So between levels, you trade freely.
And
That's yeah.
remember the other thing, Barry, the 10-year closed below 4% today,
Right.
3.62.
Mm.
Again, there's a signal there. Now we're just trying to see, okay, what effect does it have on other markets? Let's see. We got to watch price, and that'll tell us.
Yeah, yeah. So we'll look at the markets. I mean, a lot of the markets we're going to look at from now on is everything that moved. So bonds are moving, signaling a lot of things, and obviously, the stock market is not getting the signal, or they got the signal and they don't want to move. The other
They
next,
always, they always say that the bond market is smart money and the equities is dumb money. So maybe it just takes the dumb money a little more time.
absolutely, yep, yep. So, and that 45. Here's the other thing, you guys. We talk about a lot of these things, levels and numbers, very casually, and we have to go a little bit fast because of the time constraints. But this is kind of a big deal. The fact that we broke out of it, and even if I didn't have to say that, if you guys just look at the line going back, you can see how he played such a key role, right? And now we broke out of it after a few months, and is breaking out under all kinds of change and funky news coming over the wires. So, and we're moving higher, and stock market's not moving. So those are the pieces we have to really watch closely. And whichever markets you trade, it's helpful to watch where all these levels are, especially these Gann levels, because that's where you can minimize your risk of getting into these things, because we
And
know those levels are pretty solid. Yeah.
and speaking of big messages, here's one from Crude.
Well, and not only big, but how perfect, right? So here, you guys know, we were waiting for 61.61. We got above, and we squeezed between the two levels that we had on the board, and then this is what holding above looks like. Great example. We broke out. Sure enough, 1, 2, 3, 4 days, and then we dipped. That was sort of a test, right? And right back up. So you can see the body of the candles are all above 64.75 level, right? That we have drawn out. And then on Friday, sure enough, we started at 64.75, messed around a little bit, and then we rallied. All right, so we made into a new high. Now, is this all new? Are we excited about only because of that? No. We've been talking about crude going up ever since we were back in December and early January, not because we knew anything was going to happen, but just because of the charts, right? We saw the false breaks, we saw the flushes, we saw the higher lows coming in, and then it was moving towards the 67, 64.75, which is sort of it's sort of that, like the key number. We were the 116 and a half in bonds. If you look at the bonds, right, we have this key level that the market was wrapping around, and the same thing with 64.75. It's been wrapping around, but slowly, let's say, because if you go back and look at September, October, November of 2025, you can see we were bouncing around above it, right? So now, finally, August of 25, we broke under, did a really good test all the way down, and now we're back above. So, but the trend has been going ever since that we started to make these higher lows starting here. And this is why we watch those higher lows, because it tells you early on what's happening with trend. So this trend has been going on since early January, right? Now that's 2 months by next week. So anyway, just wanted to point that out. Normally we go too fast to go through the finer points, the fine detail, right, Ben?
No doubt.
Yeah. So here's let me cover the weekly bonds. We have, the resistance we have, the 119 and a half level or so is from this chart, the weekly chart, which is coming off the high we had in 2020. It's 144 degrees down. It's kind of a big deal. The interesting thing is, normally if the market's really weak, obviously we'll bounce off of this and sell off. And here you can see we didn't, after this couple of, I would say this would be the flush, right? The false break
Sure.
back in May. We managed to move up high all the way till we went and tapped the key resistance level. And then the pullback, you watch, it held above our level, which was 114, exactly right there on January 24th. And from there, what do? We turn around and running back up. So this is that number I mentioned in the on the daily chart. This is why it's really important that 119 and a half area is the one to watch, because if we get above that, we're going to go higher.
It's a big spot.
That's a big spot. And if we go higher, I don't know how how the rates are going to work, but they'll be low. And if we don't, if we can't get above that and roll back down, then there's something else happening. And I think that's what makes the whole thing interesting, because we can see how many times we visited here and really couldn't get above, right? So all the action's been below that. Anything you want to add to this weekly?
No, that level is huge.
Yeah, yeah. Just watch the numbers and the pattern, right? That'll get you through. So that's what's happening in bonds and crude. Let's look at the metals. I'll do the metals together and then the weeklies faster. So gold, we've talked about the levels. Last week, I gave you guys the 3 levels and said, look, it really depends on the levels we hold. And the quarter level was, 51.12. And you can see, we managed to hold above that. So the rule of thumb was, if we can hold above the highest level, obviously the market is in a strong position, it could run. And we were saying, 49.29 is still good. Then the case to run up faster, sort of fades away as we get lower. But we held the 3/4 level very strong, and we challenged the 270-degree level, which is 52.94. And if we clear that, I'll tell you, we open up an entire new thing, and we can, really, if we get through 50, the old high, I would say 56.55 because it's a 50% level, 56.53, 50% level. If you can get through that, then we're going to 6,000, which would be
Hey,
very cool.
put an ABCD on that. Where does that
Right
go up
there.
to? Does that get you to the new high, a new high, or close to the old high, probably?
Let's see. Oh, very close.
Yep.
We'd get a
Yep.
lower high. That would be interesting. So either way, it's going to set up in a very interesting way, because if we get a lower high, ABCD going in, obviously, that's going to signal some
That's
kind
a
of a
sell.
pullback. Yeah, that's a sell.
All
That's a
right.
gimme
Yep.
and better sell. And if we blow through that, obviously we're going to, then 6,000's in the cards,
Yep.
or if we pull back, hold above this. So, but metals are all fueled up. They rested enough. We held the correct levels. So I think it's looking pretty good.
At 270 level, you have the 52.96 is a good one. That's a good level.
Yeah, it's a very solid level, and I
I
think
mean,
it'd be.
it can give you an idea of, okay, are we going to keep going or are we done, with this, was this a corrective move, basically?
Yeah, I mean, with even without the ABCD, if we can hold above that, that's very
Hmm.
bullish, right? Any kind of a consolidation above that. So yeah,
Agreed. Yep.
let's
Let's
watch
see.
that closely. Yep.
Yep.
Let's move on to silver. Silver, guys, I'm sorry, I'm not, I can't show the. Well, there you go. Just a little bit more of the chart. Pull it down. Look at how well the levels work, right? I talked about 72. We came down, tapped it, got above 81. Perfect. And 90. Those are the three numbers I've been working with, for the last couple of months. So it worked out nicely. So we're above 90. This is good. And, we have 50% level is that way silver's moving. I don't even know if 50% is even worth giving out. So it's 99. It's 50%, but let's focus on like 101 for that, or 100, 101. Yeah. And 720 degrees up from the 22 low would be 108. Oh, so I think those are the upside targets. If we can get through, let's say 99, we got 108 to look forward to. And the main thing though is to see if this is real. We want to hold above 90. So let's say 89. We want to hold above 89, and obviously above 81. Market very strong position, and this is all very good. Looks good. The thing is, we want to see if this is a terminal run, or this is gonna run up and establish a little bit higher. You know, that's the key to watch. Let's look at copper. Copper basically is holding. We were talking about how we were wrapping around this key level, but long as we're above 565, that copper is in pretty good shape. And 580, this 588 level we've had forever, is the level we have to clear. If we clear that, we can be on the upside. So we cleared it. We got on the upside. Now, if we can hold above it, consolidate above it, I think we're still bullish. We can go up and test 650 or 683. I think upside is okay if we can settle above this. And now you guys know pretty well what settling above means. We do have a little bit of a trend line you guys can watch. What else can I add to this? No, metals are all kind of running. We want to see. I said, are we going to run up and go make a lower high false break, or are we going to get established up here and move higher at some point? But watching these levels will help us understand that. So now you guys have the levels. Everything is cool. Take a look at the weekly. Start with the weekly gold. Now, the thing with the weekly gold is, well, first of all, the same story, right? We talked about the levels, 48.15, 53, 52.38 to 28. The whole thing was about, being able to hold above or not. So we held above this 48.15 level, 48.05 actually level, and then we managed to hold above. Now we got above the 53.38. Again, the next stop really is, let me give you a real accurate number here. Let's say 56.42 is the next resistance level. And if we take that out, then we get to the 6,000 zone, right? And then the weekly, that's 60.63. Again, we looked at the daily. This looks good. If we can hold about 52.28, I think the weekly's in pretty good shape. Looking at the silver, same deal, the weekly chart. You can see these lines actually mean something. You can see where we broke out on the weekly. 84 was the level we were watching. That was the main square level, and we cleared, basically we gapped and
Over
ran.
it. Yeah.
Yeah. And that's usually what happens. We tend to gap above this line. And you can see here how we got above, held above. This is a good example of getting above, holding above before this run. So lots of cool things on the chart. But for now, the next resistance, I mean, this squared out, and this is all we got out of it. Now we're right back up, right? It looks pretty strong. Looks like we're not done. So here on the weekly, I get 102. I know I said 101 on the daily. 120 is the weekly resistance. So this is going to be interesting how if we get up there past the 101, how we handle that. For now, as long as we're above this 84 level basis the weekly, 81 on the daily, price is in pretty good shape. Let's go to copper. Copper hit the full square 2 weeks ago and we pulled back. Now, the really important thing is we held about this 535 level, 537, and sort of the balance point is 593, 590, 589, 593. 589 was on the daily, right? It's very close together. And once we're above that, now we're, the target's basically up in the 650 area. So if we can hold above 593 on pullbacks, copper's also in pretty good shape. So that's what we have to look forward to. Let's move on to take a look at currencies. Let's take a look at Bitcoin. Bitcoin, what a story. So we dropped this ABCD last week. Didn't quite get there yet. But I tell you what, we did talk
Winding up
about.
for it.
Why?
It's just winding up for the drop.
That triangle is just getting tighter, right? It's just like,
Mm-hmm.
look at this now. This is after this week, right? It was really like
Mm-hmm.
that. So last week we talked about, all this history stuff, you guys know, basically every swing we're able to frame through the squares. Last week we talked about the 68,580, and we can't really get above this. The market's in trouble. And sure enough, last Friday we couldn't get above it, and sure enough, Monday, Tuesday we're down. And this trend line, I think, was already in place. Trend line held it and tried again to get above 68,580. We couldn't do it. Now we reversed. So here we are. Obviously, the next few steps are not too difficult. If we take out this trend line, we take out this low from earlier this week, it definitely opens up the downside, at least to this 56,886 level. If we get down that close, might as well finish the ABCD. So that gets down to what was on Ben's chart, what, the 52, 54, 52,000 something, right?
In that area. We'll
Yeah.
go over it.
Yeah. Okay. So that looks, all I'm saying is the pattern so far is fitting everything. It couldn't really get above this. Therefore, everything looks like it's sort of rolling over. And the proof will be this low last week getting taken out. I don't know about proof, but it'll definitely signal towards that ultimate end. All right, take a quick look at dollar. Dollar after that flush, higher low on the 50%, made a little bit of a high, and it's triangulating so that, we have a triangle here, ascending triangle, and I don't know if dollar is going to take us out. I'm guessing no, but these triangles are always tricky. So obviously we can go higher, break out, retest. Dollar opens up the upside. Don't forget, I said this. This is where it's going to happen. But even if it comes down a little bit, as long as we're above this high, this low, we still have a triangulation going on. So that's the level to watch. And what's the level of these highs I'm drawing a line on? It's 90, let's say 98 for all practical purposes. Okay. All right. That's it for the dollar. Let me call it. Euro, basically after we tapped against the major resistance at the square level, came back to the quarter level, and we're kind of straddling here, not looking that amazing, So I would definitely watch these lows and watch the highs too, I suppose. Why not? While you're at it. Yeah, that's it for the euro. Oh, the level we're working with is 1792. Okay, 1792 is the level. Let's take a quick look at the weeklies. Is the euro. I don't have a Bitcoin weekly for you guys because Ben covers that. Here's the weekly dollar really quick. We have an inside bar, the move out of the flush, out of the support level, 95.50, which it caught pretty well. Stalled out at the zone, the old support level. So now it's become resistance. So we have an inside bar. My take is if we take out the high of this week's bar, we're probably going to shoot higher right through 98.25. So watch out for that. Now, if we take out the low, we're probably going to come back and test the 144 level, and that level would be about 96.77. So watch out for that. Moving on to the weekly euro. We had that spike high. We had everything figured out at this point, we thought, and of course we did this ABCD up, kind of cleared the things above, and we had this really nice reversal, came down, and now we have an inside bar. So everything's working to the downside. So a really important thing to watch. Remember, I drew that little trend line under the euro. So if we take out this week's low, obviously that's bearish. And 1654 might be where we end up for the first level of support. Of course, there's a little trend line coming on over these old highs, old lows. So if we take this out, then that'll mark this phase of the business done. And now we can work on the downside. I'll be brave and say it. Anything you want to add to any of this between the dollar and the euro, Ben?
Now, just the message is that it's weaker euro, stronger dollar.
That's what it looks like. And it looks like this is kind of came to a flushing point, because I remember right in here, it actually, yeah, all through here, it's still, a lot of people are bearish on the dollar. So this is when those corners usually come in. All right.
No doubt.
No doubt. All right. Let's see what else is happening. Hang Seng, we have, we had this kind of a false break, came down, lower high, but we're holding, pretty well above this 26,230. And that's bullish. As long as we're above this 26,230 is bullish. If we can get under that, well, then Hang Seng's definitely in a little bit of more trouble than not. So, and this kind of gives you a little bit of a descending triangle kind of a pattern. So it's possible that we slip through. Watch out for this level. 26,230 is the level to watch. Natural gas, we haven't abandoned it. It's just, not a whole lot to talk about.
Just drifting.
Just drifting. We're right at this 298 is our key balance point. Now we're a little bit under it. We were a little bit above it. We had these breakouts, but they just didn't hold above key levels. So we got to let it go. Here you can see we rallied up to 440 and then back down again. So let it finish up. These lows happen often. Last time we came down here was in August, and before that it was back in November. So they happen. All right, that's all I got. I think I covered everything. Move it on to your show. Take a look at all the commodities. I think that's really where the spotlight should be these days. All right, more triangles.
More triangles. Yep. So the NQs, Barry already gave you a little preview, but we did a little false break out of this triangle. Like, look at that. Look at that. Just above the highs here. Didn't quite make it up to the full square or the ABCD, and a strong reversal.
Very sneaky.
We got two down bars. The pressure's to the downside, but obviously we got to start taking out these lows. A key point that I've been highlighting on the, morning tweets about NQs is this 25,000 level is pretty key. And I'll show you why when we look at the calendar day chart. Today, we closed under it. The longer we're under that, the more the pressure is going to be, pushing down to this, 5/8 of a square aligned at 24,624, and then ultimately down to the 50% of the square where there's strong support. So it's very tricky. We're stuck in this range, although we have a high, a lower high. Here's your low. We still haven't taken out that low yet. So the pressure to me is to the downside, because you can see the sellers are stepping it up as they come here. They used a false break here a couple of days ago to capture that move. So I think the pressure's to the downside, but we got to be below 25 if that's gonna materialize. If we keep crisscrossing 25, then we're just going to be in more chop. Let's take a look at the calendar day, and I'll show you why that 25 is so important. You can see why here, right?
Wow, look at that.
Yeah, this is really important spot. So, and we're battling over it. You can see the battles, all week we were crisscrossing this thing. So next week, let's see, do we get, start getting full bars under here where we can say, okay, here the pressure is going to be coming to the downside.
You should move that one by one to the lows,
Yeah, over here.
right? Yeah, or the
Mm-hmm.
middle low, second low, and see.
Mm-hmm.
But we don't need
Yeah,
that. I mean, if it breaks, that's gonna really kind of show its hand, right?
absolutely. The key thing is, again, do we start printing full bars below here, then the pressure is going to materialize and we'll roll over. So we keep an eye on this chart. Let's look at the weekly. Here's your weekly, and this sort of summarizes what we've been through. So we had this one big bar that was a month ago, 4 weeks ago. Then we had an inside bar. Then we took out the low of that inside bar. And then this week we took out the high of that inside bar. So a lot of
Designed to make you crazy.
right, a lot of
Don't go for
activity going
it.
nowhere. Again, the key thing, we're below this 50% of the square, 25,932. The circle sort of has turned things down. Now we got to see, can we get under 23, roughly 24,000, 23,966 is the next, I think, important marker there. But the top, we have the top well defined by the circle and the 50% of the square. So as long as we're under that, the pressure's down. Let's take a look at the monthly. The monthly bar is printed. And so what does it tell us? We've been inside for 3 months now, inside this big bar. Actually, no, we did poke above it last month. So we had a reversal. I thought those were all inside. That's not true.
Well,
Because
it's a
this,
big sign. Next time,
yeah,
we'll see what happens.
that's a monthly reversal. So we do have a
Yeah.
monthly reversal. Again, the 24,000 level on a monthly basis is key, because we're up here, unless we have a massive gap, which is highly unlikely on Sunday, we're gonna print above here, and now we see can the bears push us below and get a monthly close under 24,000. And 24,000 is important because it's 180 up from the .com lows, right here, 180.
Right. And look, it's a high. We have a lower high, and then we
Mm-hmm.
reversed off that lower high.
That's absolutely right. So this is while it's a tight formation, it's not, it in time, you got 4 or 5 months here, but price wise, you're pretty tight. There's a lot of information in there. As Barry said, you got their high here, then you got a down bar, and then you got an up bar with a lower high, and now we've reversed that.
I mean, if that was opening range, we'd be selling that thing.
Oh, we could only hope it would move like that. Anyway, so we got to watch the prints this coming month because, starting Sunday night, we'll have the first prints of March. And for a monthly basis, it's 24,000 is the key. If we start printing consistently under that, that means that the weekly, the daily charts have all rolled over, right? And the monthly will soon follow. So any other comments on the longer term weekly, monthly here?
No, I'm glad you covered all that.
Yeah.
Perfect.
Yep. All right, let's take a look at Bitcoin. Barry covered Bitcoin. The thing I'll show you, here's the ABCD that Barry drew in last week. I put it on my chart. We're triangulating. Look over here what happened. I think it's a small version of what we may be doing. So we were coming down, we did a triangle, then we did a flush, right? Down out of the triangle, which went about a,
Mm,
a half square from the apex, right?
right, right.
If we do the same thing here, take a half square from the apex, it gets us almost down to that target.
Wow, that's a good one. Good
Yep.
eye.
Yep. And it'll push us, down into the support, which 50% of the square is around 50,000. Here's more support on the weekly, 52,000. But notice that the last 2 weeks, full
Hmm.
bars printing under this 50% of the square. So the pressure is down. It's just a matter of, okay, when are they going to release it and bring us down there? That's what odds favor. It doesn't mean it's guaranteed, but it's certainly what odds favor, which is we're going to push down to this, full square at 52,000. The monthly bar is printed. We're well under 74. again, we're going to have the possibility of a March bar printing fully under here, which would add more pressure down to the 56,000 level here, which is
Mm.
50% of the square.
We're closer to one than the other.
Yeah. So weight of evidence in Bitcoin, most likely we're going lower and probably into the 50s, into the 50,000. Whether it's 56, 54, 52, 50 in that area, we'll have to see. But the pressure is down, and we're getting it from multiple time frames. Anything else you want to add on the weekly or monthly here?
No, we're good. That this chart is just amazing.
Yeah, that's a
The
good one.
weekly, very good chart.
Yep. Good vibration.
Yeah.
All right, let's talk about commodities. So Barry and I have been, when we talk during the week, we exchange ideas, observations, see what are you seeing, what am I seeing, type of thing, because you don't sort of see everything. One of the things we both were picking up on is that money's moving into commodities. Now, where it's coming from, who knows, right? But we do know the commodities are seeing money come in, they're seeing demand, and we'll show you some that we've been tracking with you, week to week. But you can see it, and Barry did a great review of the metals, even though they had that spike, and now the shiny object is something else, for the hot money to focus on. They're not looking bearish, right? They're recovering, they're holding levels, they're sort of stair stepping higher, rebuilding the charts. So I don't think the metals story is quite over yet. And that again bodes well for commodities because they're a big part of the commodity complex. So today we're going to cover the grains, cotton, and crude. So let's start with the grains. Here's wheat. And this is just it it looks like it's just so easy now, right? When we were going sideways, it was so boring. And then the clues started coming in. We had the false break. We had the higher highs and higher lows. And now look at this thing stair stepping this week. The interesting thing here is notice the change, how the uptrend was really sort of flat. It was moving up, but it wasn't moving up on a good angle. This is a one
Hmm.
by one. That's a bull market angle, right? 45 degrees that's the bull market angle. And so here we're seeing this week we started to pick up more sort of steepness in the trend, and that's a sign of momentum and money coming in. So, last week we were talking about this 570 was a key to hold. We danced around it and then reversed, and look what we did today. So now we're pushing 641 is 50% of the square, and I think that's the next target here. And as long as we're seeing, higher highs and higher lows, it's all good. This is what you want to see in a bullish market. Let's take a look at the weekly. Weekly's a little more dramatic because you can see we sort of been here. We were quietly up for a month, right? Because people could say, oh, that's still sideways. Nothing's happening here. But now it's getting a little harder to stay quiet about it. And it's picking up more sponsorship and more people coming into it. And that's why we're seeing, this series of up bars. We have 1, 2, 3 inside bar, 4, 5, 6 up bar, 6 weeks in a row, actually, 6, 7 weeks in a row on wheat. But it's not making the front page of the Wall Street Journal. The chat rooms aren't talking about it. It's just being accumulated and pushing higher. They'll talk about it when it does this sort of thing.
Yep.
And if everybody remembers cocoa, we talked about cocoa, and I remember it so vividly. I was at the gym the day it went crazy, right? It went
Hmm.
absolutely crazy, and it was on CNBC. That was the top. To the day, it was the
Yep.
top. And it just made that spike. So CNBC put it on, and then that was it.
And you
So
ran home and got rid of your position.
yeah, no, you and I talked about it. Remember,
Yeah,
I
yeah,
said,
I
Barry,
remember.
you're not going to believe this. Coco's on CNBC, and we're like,
Hmm.
okay, sell. Anyway, that's this is when everybody will be talking about it. Right here is when sort of the people in the know that understand the fundamental reason. We don't understand the fundamental reason, but there are people that do, and they're buying. And so that will be known at some point in the future. Let's take a look at the monthly. The monthly's really highlighting this area, and we've talked about this area, how important it is. So the close today was 91.50. This level is 595, and you can see why it's so important. Remember, this is a 5-year sideways consolidation that was capped by this 595 level. Here was support. Here was resistance. Back here was a resistance. So this is a big spot. Once we get up on top and can sit on top of that, that's when the launch really happens. And you can see it, from here, right? Banging up against it, got above it, tested, and then gone. So let's watch this. Doesn't mean we're going to do it this week, right? Wouldn't be surprised if we, bang around or crisscross it for a little while and digest, the last few weeks move, the last month's move. But if we do push above and sit on top, it's going. So watch that very closely. Anything else you want to add on wheat?
No, we're doing fine. You picked it up early on and it's moving perfectly.
Yep, it's
We're good.
moving. All right, let's jump to the next one. Here's corn. It's been a volatile little bugger. Look at this sort of stop hunt. How about that move, Barry, huh? Somebody didn't have enough inventory.
Well, they got it now.
And then they
So,
and you're right. Look how it recovered, and
Yeah,
we're
yeah.
right back above. We
Right back
even
up.
we even got a close above this, 72-degree line at 446. So next week, what we want to make sure of is, can we stay on top of 446? If we do, it opens up higher prices.
Absolutely.
But corn's looking good. Low, high, higher, low. Let's see if we can take out that 519 and get a higher high. All right, let's quickly look at the weekly. Here's your weekly. Again, doing what it has to do, right? Went up, pulled back, stayed above 412, and now we're pushing higher. Next week, hopefully we can take out these highs, and then we push up to 464, and then after that, it's 517. So capturing that full square was key on a weekly basis. Here's your monthly. Monthly, we got some overhead here. Again, this is sort of like that point with wheat. 463 is pretty important. You can see why. It was the top on this 7-8 year consolidation. It was the top over here. It held things up here. It again becomes another launch point that we can look at. So let's watch 463 if we keep rallying this week. See if we can get above and sit on top. If we do, then it really gives us the impotence to go higher. So corn's pretty straightforward. Anything else you want to add?
No, we're good. I think all the grains are very interesting, and
Yep.
I'm glad we're watching them.
Yep. Here's the star so far.
Hmm.
Beans, higher highs and higher lows, right?
That's what you call it left the station right there.
Yes. Well, here was the real test, right? Strong pullback right into
Absolutely.
into that full square, and then it just,
Hmm.
monster. 1170 is the level to watch for the coming week. We sit on top of that. It's 1200 plus beans.
Good.
Here's your weekly. Same thing on the weekly. 1170, 1171 is key.
What a great pullback. Wow.
Yep, right into this area. It was the test of this. Remember, this is not a like 5-minute chart. This is weekly. So this is like a year and a half, 2-year sideways. The breakouts out of these things are really, really strong, and that's what we're seeing. Now let's check the monthly. That's a nice monthly candle, huh? Erasing the previous 3 months worth of candles.
Yeah. Yeah. Yep.
It's a pretty
Very
strong
nice.
move.
Hmm.
So you can see 1200's the next line, and then after that, 1275. So beans are on the way. And in overall, the summary for the grains is they're looking good. Use any pullbacks to, add to positions and enjoy the ride. That's the message there. All right, next one we want to look at has been one of the most boring ones for years, and now it's starting to be a lot more exciting, and that's cotton.
Hmm.
When you see the weekly, monthly, you'll see why I said one of the most boring charts to look at for years. But here we've got this move. I drew in a little ABCD. Maybe we're going to go up and finish that, and then pull back. Maybe we have to pull back a little more. The main thing is we want to stay on top of the full square if it's a deep pullback, or stay on this 1/8 line. That would be great. Otherwise, the push right now is to 68 and a quarter, which is 50% of the square. Let's take a look at the weekly. Okay, you can see why we're at an important spot now on a weekly basis, right?
Yep.
And you can see the boring sideways I was talking about. Look at this. It was
Yeah.
just a sideways drift. But now we're at a really key spot. 66.41 is 50% of the square. Next week, we'd like to see a little push above. If we crisscross it, no problem. What we want to see over the coming weeks is getting above and then staying above, because then that opens up the full square. And to move to like 75 or 84. And that'll basically be attacking this zone here next. Let's take a look at the monthly. Depending on the close, I was watching to see, did we get it? Hold on. 65, 70, 76. Just missed it. We almost did an outside reversal monthly here. But we did do an outside bar. We're breaking the downtrend
Is that a
line.
new high? I thought we had it outside. No?
It is an outside bar. It just didn't give us the close,
Yeah,
wasn't
yeah,
above,
right,
right?
right.
So we didn't get the outside. So 66.27 is key for the next month. We print a bar over that, then it's 73, 74, and then 88. But look at this downtrend line. Remember, this is a 1 by 1, and we're breaking it.
We're tapping it
Finally.
perfectly. Yeah,
Yeah,
yeah.
finally, finally. So let's watch and see if we get some follow through there. But it's very encouraging, the signs we're seeing from this. We haven't seen, a move like this in a while. So let's see if it can catch hold and keep going. Lastly, let's go to something Barry talked about, crude oil, but I just want to show you a little different perspective. Again, we were boring, 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 drifting sideways, and we got the false break, and now we're getting higher highs and higher lows. But we captured 62 and a half, right? Got on top,
Yep.
stayed on top, pushed up. Now we want to get above 68.11 is next. Sit on top of that, then we go to 73, 50% of the square. But you could see the change in character, right? Here it's the drift and the push down with lower lows, lower highs, lower lows, lower highs. Here, the opposite, right? And there's your pivot and your change in December.
67, $70 crude. Okay.
Yep. Here's why 67 is important on a weekly basis.
Hmm.
Forget about the square, right? The square tells you it's an important spot, but look at price action around here. Resistance, resistance,
Hmm.
support, 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 resistance. So if we sit on top of that, again, this is weekly, it's launch time. Things are going to move and move quickly. So watch that 67 on a weekly basis. Here's our monthly crude circle chart.
Boy, that thing reversed perfect.
I mean, see,
I mean,
see,
the
as soon,
circle. The,
yeah, see,
the,
we escape the circle and then we start going 2 months in a
pretty
row,
good. Pretty good, yeah.
higher high. So here, 71.59 is next important resistance. So I think the odds are sort of stacking up that we're going to see $70 crude. And
At least.
yeah, and you've been very bullish on it, so it's not a huge surprise. Anyway, I know it's been a long week and a busy week for everyone, so rest up. The next couple of weeks should be super, super exciting. Use the levels, tune out the noise, and just enjoy the volatility because it's not always there. Great job, Barry, and we'll talk to you all next week.
Thanks, Ben. Good job. And you guys have a good weekend and rest up because I would say March is going to be an active month, unlike February so much,
Yes, sir.
don't you think?
Yes, sir.
So, yeah. All right, you guys. Thanks for everything. Thanks for the likes, comments. We'll see you soon. Bye.
Take care, everybody.
Mhm.
Bye bye.
Bye.